Talk Money. I'm here to answer your questions today. I want to say hi, shout out to everybody here who's joining me live on Facebook and also on LinkedIn. You are welcome to ask any questions that you feel that you want to ask today. This is your time. This is your place. This is Let's Talk Money, and I'm here to serve you. So usually we just want to take a moment and have people check in. How are you today? Anybody have a comment? How's your week been? How are you doing? Suzanne, good morning, good afternoon. Texas. Suzanne's coming in from Texas. Hey, good to see you, Suzanne. Thanks for being here. How's your week been? How are you? How are you, Suzanne? Good, I hope. Good, I hope. How's your money? How is your wealth building? Hey, my philosophy is that inside every woman is an ace money manager, just waiting to be empowered right here on Let's Talk Money. And so that's what we're all about, is talking about wealth management, creating wealth for yourself. All questions are allowed. There is no such thing as a silly question. So I'm here. There's no such thing as a question that's too small. No question that I'm not willing to spend time to answer. And most of you know that I spent nearly 35 years as a professional investment advisor as my first career. And I'm circling back here to be of service to women because I believe that now more than ever, women really need some support. A friend of mine sent me a text just this morning, and she had seen a post in the Washington Post, an article in the Washington Post, my friend Lois. And this article from the Washington Post, its headline was "Single Women Take a Growing Role in the Economy, and Yet They Are Largely Behind the Curve when it comes to spending power." In other words, more and more women, single women, this article is about, are a larger part of the growing economy. In other words, we are working, we have great jobs, we are bringing in income, we are investing, we are making progress, and yet there's so much more. There's a big wage gap, as the article talks about, a very stubborn wage gap, as well as some they call diluted spending power. Well, what does that mean? Well, really, it means that women have a bit of a hard time figuring out how to manage their money appropriately or wisely. And so, they often misspend, overspend, hoard, underspend. And so there's something I believe is to be said for learning more about wealth. What do you think? If you agree with me, put a thumbs up in the chat for me. Put thumbs up in the chat that you agree with me. Suzanne says, yes, I'm feeling awesome today. Way to go. A way to go. Suzanne, thanks for being here. And I see a question here. And Shauna's here. Hi, Shauna. Hi, Shauna. Great to have you here. I'm really, really glad. I have 2 questions coming in, and we're going to take those right now, right from the top. But before we do, I have an announcement to make. Starting next week, I'm going to change the time and the place because I get to, since this is my show. And I just think it's going to serve you better. And this is going to be, instead of on Fridays at 3 p.m., I'm going to switch it up, and I'm going to initiate Wednesdays. I've heard that more women would be here live if it were not on Fridays at a time when they're trying to get home from work, and Friday afternoons sometimes are a little bit busy. So I'm going to, as of next week, we're going to move to Wednesdays at 1 p.m. Eastern. And this is Women's Wealth. Money Talks for Women is moving to Wednesdays at 1 p.m. Eastern. I want you to be there with me and bring all your questions. We're going to talk. This is going to be Women's Wealth Wednesdays at 1 p.m. Eastern. I'm really excited about that. So I wanted to get that announcement in right away. Okay, so we have 2 questions on the floor. I'm so excited. Thank you, thank you, thank you. Questions. Okay. The first question is Shauna says, is there a good time to cash out of a 401k? That's a great question. And it depends. Cashing out means liquidating. And so I would ask you, Shauna, what would be the reason? What would be the purpose? And I would say, is there a good time to cash out a 401k? The purpose would have to be extremely good. In other words, you'd have to have a really good purpose to offset the reasons why not to cash out of a 401k. So let's just go through the pros and cons for a second of why having a 401k for the rest of your life is good, and why not, or why to cash out. Now, there's an adjunct to that question that I'm just now thinking you might be meaning, Shauna. So maybe a clarification. Did you mean when you asked this question, instead of cashing out, which means in my mind, that means liquidating and spending the money? Or is your real question, when's a good time to convert it into an IRA, which is taking it out of a corporate setting? 401ks are retirement accounts that are established by a corporation that you worked for at one time or are still working for now. So a retirement account, 401k, is a corporate vehicle. So your question might be, when is it a good time to roll that over into what we call a personal IRA account? It's usually called a rollover IRA account, from a corporate rolling over to a personal IRA account. Both. Okay, good. So let me answer the second one first. The best time to roll over your 401k account into a personal rollover IRA is when you no longer work for that company. That's the very best time. In other words, you're really moving away all of your assets from being held or having any personal responsibility or corporate responsibility to the former corporation that you worked with in the past. That's the best time to convert. And simply, the conversion is quite simple. You just open up a rollover IRA account in a brokerage company or at a bank or any place. There's just so many options. But it is a personal account then, and you just take all of the assets from one 401k and you roll it into the IRA, the rollover IRA. There's no taxes due with that rollover. So the only difference is that now you have control over your own assets. You can manage that personal IRA. Whereas in the corporate 401k, you had choices that you selected that they gave you. They gave you certain numbers, the corporation gave you a certain number of choices, right? You could purchase A, B, C, D, E. But that's it. But in a rollover IRA, you have total control. You could, buy any investment that you wish. So I always like personal control, don't you? Don't you think that that's always a better way to go? Don't you, Shauna, think that, especially if you're no longer working for the company? So that would be my answer there. And then if you wanted to absolutely cash out of the 401k and utilize that money and not roll it over into an IRA. You see, the IRA rollover helps you to maintain your retirement account as a tax advantaged account so that it can grow tax free. It's under the umbrella of the IRS rules that allows that retirement amount of monies that you now put into a rollover IRA to continue to grow tax free, even as you continue to make new investments inside that account. But you don't pay any taxes, and it grows faster because you're not paying dividend taxes, capital gains taxes, and so forth. But if you were to cash out and use that money elsewhere, it better be a really good reason. It better be like maybe health concerns that you really absolutely needed the cash to pay a major health bill, or you needed it to pay down a mortgage or something that you absolutely had to pay down, or there may be some extenuating circumstances, but that is a taxable event. When you take it out of the 401k and you actually spend it or utilize it as a personal asset, you're going to be taxed at the rate of your personal income, the amount that you're actually cashing out. And so if you do that, you want to make sure that you may not want to do that all in 1 year. You may want to roll, divide that into 2 or 3 years if you're actually going to be cashing it out. You want to you take that out in increments in, let's say, 2023, 2024, 2025, so that you're not taxed too brutally on any 1 year, because that is all taxed at the current rate. I hope that answers your question. Good question. And now, you're welcome. And I had another question here. Let me just go back and see. Suzanne has a question. Suzanne says that she's feeling awesome today. Good. And the question is it better to increase your credit limit with a second account and to get completely out of debt? I was seeing that having loans, I keep seeing that having loans is good, question mark. A second account meaning getting a new credit card. Okay, so let's go over that. She goes on to say, I paid off everything in 2009, but not sure if that was the best thing to do or not. Okay, super. Well, first of all, if you paid off everything in 2019, not 2009, if you paid off everything in 2019, congratulations. That means that you, at that point, were debt-free from credit cards, and that was a good thing. I always encourage, as soon as you can get out of debt, you can start getting into savings. And as soon as you get into savings, then you can start getting into investing. And as soon as you get into investing, then you can start really building your asset base and creating wealth. So the debt problem is real for a lot of women, and we want to move from debt to savings to investing to creating wealth. Okay, that's the road map. That's the game plan. So if you're still stuck in debt, there are a couple of things. There's good debt and there's not so good debt. The good debt would be mortgages. In other words, debt that you took on to buy an asset that serves you. So your home, if you want it, and we'll get into talking about real estate today in just a second. But real estate is a great investment because you then have your own home ownership if you wish to have that. In that case, you take on a mortgage, and it's usually a 10-year mortgage, a 15-year mortgage, a 30-year mortgage, one of those three. And usually a mortgage means that it's you're taking on a lower interest rate relative to the credit cards, of course. You have to qualify for a mortgage. You have to have the kind of credit rating that qualifies you for a mortgage. If you don't have that credit rating, you can always get a co-signer for a mortgage that does have the credit rating. But so that's An example of good debt, often you can write off the mortgage interest payments against your current income. So that investment actually is one that helps pay down your income taxes every year. So there's some benefits to having a mortgage. That's a good type of debt. The bad kind of debt are credit card debts that are at the highest rate, and it's amazing, 20, 25%. And as interest rates move up, those credit card agencies are moving up their rates as well. However, some of them are giving really interesting low rates to get you started into debt. So it makes you feel like uh, you feel like you're privileged, that you're being offered a lower interest rate by a new credit card company that's coming down the pike and says, "Hey, I'm going to give you 0% interest um, if you take a loan with us, with our company, and we'll give you 0% up to maybe a year, maybe 6 months. But after that, we're going to sock it to you with a 20%, 17%, 20%, 24% interest rate. We'll give you 0% up till then." So that's a pretty good deal if you know that you're going to be able to pay that off or really pay it down quickly before that 0% special offer runs out. But is it better to take on a second card? I think that your real question is it better to take on a second credit card to get yourself completely out of debt? Well, yes, only if that new credit card is at a lower interest rate than your current one. So, yes, you can transfer your current debt from a higher interest rate and get your interest rates lower in a short-term period, and that is a great strategy. That's a good money management strategy as you're managing yourself out of debt. Sounds like you got back into debt a little bit after 2019, and that's okay. We do that. We have, expenses, and sometimes those expenses need to go on credit cards because you may not have the cash at the moment. Once again, it's excellent to take on a second credit card only if it will allow you to pay off your first credit card and at a lower interest rate. And as I mentioned, there are some really good deals in the market right now because people are really, car loan. Car loan, yeah. Well, it depends. A car loan oftentimes is a pretty low interest rate loan. A car loan is similar to a mortgage in that, most car loans are somewhere between, it depends on when you got the car, somewhere between 7 and 9%, I would suspect. If you have a higher rate, then once again, it depends on what kind of deal you can get with a credit card company. So that's going to be one of those fine line things. We'd have to really compare very very closely. Would it be a good move? It might be or it might not be, and it really just depends on what your car loan currently is. But wouldn't it feel good to get rid of that car loan if you could get a lower interest rate? Okay, so that sounds good. And Shauna mentions that having no debt mortgage is fantastic. Only day-to-day expenses. Is that good or bad? Well, it's excellent, especially if you own a home. I believe, that means that I believe you are a homeowner. You shared that with me before, Shauna. So if you're a homeowner, if you have no mortgage and you have no debt, then you are in the catbird seat. That means that all income that might be coming into you, whether it's Social Security income, or maybe you have some other investments that are paying you some income, wherever your income is coming from, that capital then it's no longer going to support debt. It can go into your savings. And as I mentioned before, savings is uh, it's the birth child for investments. So as you increase your savings and you want to make sure that you have at least 6 months of savings that will cover emergencies, cover expenses, and then you can move into the investment world. And the investment world could be as safe as um, high interest paying AAA savings bonds, as we talked about before. And then you can move into a little bit more risky assets. You can move into stocks, bonds, real estate, and so forth. So that's really great. Great question, and good for you, because you are an ace money manager. I think that is awesome. Shauna is an ace money manager. That's me. Put the thumbs up. Yes, yes, yes. Ace money manager. How many of you want to be an ace money manager? I need to see a show of hands. How many of you want to be a really smart ace money manager, where you really have your money working for you better, and that you feel like you're more confident with your money choices? And also, how many of you really want to be more confident in learning more about the money world? I do. All right. I do. I can see I do's in the chat. If you're watching this on the replay, please say hello to me and put, yes, I want to be an ace money manager, so that I can support you, so that I can be here for you. And at any time, if you want to connect with me, just DM me, direct message me, and I'll be happy to answer questions that you have. And here's my Calendly link. I'm just going to put in here my Calendly link, calendly.com/Lynn Kitchen /personal call. Or you can just come on over to my website, lynnekitchen.com, and you can sign up for the newsletter, because if you sign up for the newsletter, you're going to receive all of the announcements that are coming down the way, including the announcement that next week we're going to shift from Friday afternoons to Wednesdays at 1 p.m. Eastern. And I'm going to start a brand new Women's Wealth Wednesdays, and you're all invited. I hope that you're going to be here with me. It's going to be live on Facebook and on LinkedIn and on YouTube, and we're really excited to welcome you on Wednesdays at 1 p.m. Eastern. That would be noon during your lunch hour down over there in the Pacific Coast region. So make sure that you can join me then on Women's Wealth Wednesdays. Really excited about bringing that to you. I'm going to bring you topics that are of interest to you. I'm really excited about it. Yes, you can. I've never thought about myself as being an ace money manager. Maybe not up till now, but how about now? Yes. I have a friend who started to say, even though she didn't believe it at first, but she's starting to look herself in the mirror once a day and say, I'm an ace money manager. I'm an ace money manager. I'm an ace money manager. And you know what? She's starting to think that way. She calls me up and say, well, what about this? And what about this? She's in my class, and she's starting now the intermediate. She started at the beginner's class. Now she's moving to intermediate. I have 3 classes: beginners, intermediate, and advanced. So it's the pathway. I'm just so excited, because that's inside the financial clinic. We're actually starting next week. Those classes are closed right now for March, but I'm going to be opening them again the next time around. If you miss them this time, make sure that you go to my website, lynnekitchen.com, and get in on that newsletter, so that you get all of the announcements for the next group of financial clinic classes, because we're going to start at the beginning, move to intermediate, and then to advanced, so that you too can become an ace money manager. And it's a big field, lots of decisions to make. So we go through each one of the decisions that affect your life the most. So I'm really wanting to support you to be an ace money manager, because I believe that inside every woman already is an ace money manager. You just don't know it yet. You just don't really have the confidence yet. You've already made amazing financial decisions in your life. You've probably raised children. Um, you've managed corporations. You've managed divisions. You've taught classes. You've done an awful lot in your life. You're just not giving yourself credit for it. What I'm here to say is that your life skills are so important that they can be translated into money management skills with just a little bit of real world, some real world teaching from somebody who's got an awful lot of knowledge. And that's why I'm here to really share some new knowledge with you, my knowledge with you, so that I can help you. I'm in. All right, Shauna. Let's get you started, Shauna. Why don't you direct message me and I'll give you all the details, or go online and jump into the newsletter and I'll give you all of the news. Anyway, I've got a particular topic I want to talk about tonight, and that is real estate. I'm not just all about stocks and bonds, although that was my 35-year experience as a professional money manager. It was my first career. But since then, I certainly have become a real estate investor as well. And I believe that there is a room for a balanced portfolio. So as we take a look at what is an ACE money manager, a lot of that means one of the very best investments that women can make, especially over the age 50, is real estate. How many of you agree? How many of you agree that real estate has been a good investment for you? Yes, thumbs up. And also, how many of you would love to be a real estate investor slash owner? Investor slash owner. All right. Suzanne says, yes, soon. Okay, that means that you're getting ready. You're putting together probably your deposits. You're getting your assets in order so that you can become a homeowner. I think I want to applaud you. First-time home ownership is, it just makes you feel so real. It's like, oh, this is mine. I get to make decisions. It's my house. It's mine. I get to paint it this color that I want. I get to, knock down that wall and do whatever it is that I want to do because it's mine. That self-ownership is just amazing. So I believe that every woman should have the pleasure and the opportunity to own their own home. In addition, if you feel like you want to be an owner of real estate beyond that, then obviously real estate is an excellent methodology to create real long-term wealth, as you know. Most people who have enormous wealth have a lot of property. They own their own home, but then they own multiple homes. They may own income homes, and income generating single family homes that they rent out, or they may own multiple dwellings that they rent out and they receive the passive income from that. And also there are ways to be an investor in real estate without having the headaches of being a landlord, by means of directly investing in real estate, in the stock market, in real estate investment trusts, or in second mortgages. There's just many ways to be an investor in real estate. And I have a little chart first that I want to share with you. And that's right. Suzanne said, okay, my dream is to own multiple homes in 2 different seasons, one in Texas for the winter and in New England for the summer. Yes, I love that. I used to own a home in Pasadena, California, which was the West, and then here in Florida, the East. And my husband and I would go back and forth, and we just loved it. We had 6 months in Florida, 6 months in California, and we just loved that life. So yes, that is a fantastic dream. to have a life of your dreams. And Let's Talk Money is all about your dreams, your money supporting your dreams, making sure that you have an alignment with what your dreams in your heart are that you want your money to serve. Because money isn't just all about money for having money's sake, it's to serve your highest good. It's to serve your happiness. It's to serve all of your dreams. It's to serve the things that you want to create in life. It's to serve the things that you believe in, your values like family and children and grandchildren and nonprofits and things that you really, really want to support in your life. So money has so much purpose. And to be able to have your dream come true, Suzanne, of 2 houses, one in Texas and one in New England, that is just awesome. So those are really wonderful goals. Well, let's talk about, and you don't have to have home ownership. You can rent. There are many women who really feel like they don't want to have the headaches of owning property. I get it, because owning property has its, its risks, and also it has a lot of upkeep and maintenance. And sometimes, if you want to just be liquid and free and fancy free and be able to have the kind of freedom to travel the world without having to have any particular real estate, you can do that. You can rent. My goodness, you don't have to own property. You can rent. There's the best way to decide is to really, check in with your heart and determine what is going to be the very best for you. Do you really value home ownership, or do you value the freedom so that you can just be free to move around and explore different parts of the country, different parts of the world? And if that's you, then renting a home is obviously, a very, very good, it would be a good decision for you. I have a chart that I wanted to share with you. Take a look at this chart. This is produced by JP Morgan, and it's a 10-year annualized return by different asset classes. And you might need to enlarge this on your screen, but the first one to the left is in green, and that would be 10 years of if you invested in the Standard & Poor's 500. So that's the stock market. Gave a 16% return over the last 10 years. And of course, that was during the bull market from 2012 to 2021. So it did not include this last year of 2022, but just look, 16% return for the S&P 500. And now as you move to the right, something on the third one right here is real estate investment trust, 12%. And I'm going to come back and talk about that in just a minute. But over the last 10 years, real estate investment trusts, that means by investing in the United States real estate by means of the stock market, real estate investment trusts grew an average of 12.2%. Now let's go further to the right. The bright blue column, which is 11%, that column is a combination. If you were invested 60% in stocks and 40% in cash or bonds, would be a 10-year return of 11%. Now let's move further to the right. If you flip that over here in the dark blue, if you flip that from 60-40 to 40-60, and you only had 40% in the stock market and 60% in cash or bonds, your 10-year average return would be 8.4%. Now, right next to that in the gray is with the word home underneath. Take a look at home ownership in the last 10 years had a 7.8% 10-year annualized return. 7.8% 10-year annualized return. I think that's interesting. What that says is that, the average over 30 years I have read and studied, the average home ownership return over 30 years is just about 7%. So this is right in line of 7.8%. The average 30-year return of the stock market is more like 10%. So this 16% in the last 10 years is higher than usual. So that kind of gives you a little bit of relativity in terms of asset classes, ladies, on what is it that pays over time. Now, real estate is a very important asset for you. And I believe in assets, assets, assets. The more assets we have, the more asset ownership we have, ladies. Whether we start out with the mortgage and then pay it off over time, or whether we pay it off in cash right away and own it outright, and then buy something else and something else. It's really important as it relates to real estate to make sure that it is quality, because quality will last for the long run and quality will rise in price over time. Quality stocks is what I teach, and I teach in the financial clinic how to find quality stocks. What is a quality stock? What is a quality company? How can you determine what is quality? How can you determine if that company is going to make money for you over time? How can you determine whether you're going to get a cash flow from that and a long-term payoff as an asset over time from other companies? But real estate is the very same way. You want your real estate to pay off a very good return on your investment over time. You want to be able to own a home that gets higher in value over time. Am I right? But yes, in the chat, if I'm right, you want your real estate to be a higher asset value for you over time. Now, some of you want to have real estate as not just home ownership, but an investment class, an asset class of investment. Yes, yes, yes. I can see that in the chat. Thank you so much. So let me just mention a little bit about how you can go about doing that. You can become what I call a passive investor in real estate by investing in real estate that other people manage. In other words, you don't have to own it and manage it yourself, although you can. I have lots of friends. In fact, my mother owns 2 investments in Colorado where they're beautiful homes, and she collects the rents. And it's those properties have done nothing but gone up over time, and the rents have gone up over time. So she's gotten a lot of cash flow. Personally, I've never gone into that because I like liquidity. And real estate, one of the drawbacks, as you know, from in real estate is that it's illiquid. In other words, you can't cash it in on a moment's notice. You have to put it on the market, and you have to shop around for a buyer, and you have to have an agreement between you and that buyer as to what price you're going to put it on, and it's a negotiated situation, negotiated process. Whereas a liquid asset, you can sell it, let's say on the stock market. It's the prices are determined for you on a regular basis. Every day there's a price that's determined, and you sell at that price. In other words, there's a liquid market for real estate investment in the stock market, or you can do it as a private investor where you're investing on your own. Of course, the larger amounts of investment return can be found if you have the highest quality location. That's what it all boils down to. But if you didn't really want to be an investor personally, where you maybe didn't want to be a landlord, and you didn't want to shop around for the best location, and you didn't want to figure out who's going to be renting from you, and all of the different decisions and the risks and the financing and the maintenance and all of those things that then you can become an investor in real estate investment trusts. Now, let's go over what that means. A real estate investment trust is really a company that is in the business of buying real estate, and you are loaning your money to that company to use to buy real estate with. And then that company pays you the dividends. In other words, a real estate investment trust or a company has a portfolio of commercial or residential properties in their portfolio. They go out and take all the risks of buying those properties. And then a real estate investment trust by law must um, give you or pass through, they call it, pass through 80% of their earned income, all of the rents that they get. They must pass through 80% of their earned income to you, the investor, as dividends. As dividends. So when you invest in the stock market, real estate investment trusts, that's a particular asset class that I showed you in this chart here, the third column over, REITs, that stands for real estate investment trusts. And right now it's averaging, or at least it did in the last 10 years, averaged about 12.2% return on your investment. That means that those companies that are in that business take most of the risk. So that's interesting. The entire industry of real estate can be very liquid for you as an investor. Now, what really is interesting is that there's different divisions inside that. They're one of the first real estate investment trusts that came public, meaning on this New York Stock Exchange. When I was when I was actually a young stockbroker back in the late 70s, was Public Storage. How many of you know Public Storage? That's the company that has the storage bins, so that if you have excess furniture and you want to go store your furniture, it's one of the big companies. In fact, they started in the West Coast and they grew and grew and grew, and it's still going strong. Public Storage Company now has their public facilities, storage facilities in over 40 states. And so they have grown and grown and grown and grown. And in the meantime, they have paid the dividends out to investors, plus the stock itself has gone up over time. So it's been an enormously profitable way to invest in real estate. I'm not at all condoning that particular company. I'm only giving this by means of education that was way back in the late 70s. They've had a 20% growth rate per year, almost an average of 20% growth rate per year, plus, probably, an average of 5% dividend payout in the meantime. Well, that's not so bad. So that's Public Storage. But you can also find companies that specialize in commercial real estate, buildings, office buildings. You can find real estate investment trust companies that specialize in residential. In other words, they go out and buy tracts of land and build tracts of housing. So that's residential companies, a very specialized area. When you invest your money with them, you're giving them the capital by which they take to go out and buy that land and build those houses and put in the sewers and collect the rents, and then they give you the dividends. Then there are other real estate investment companies that specialize in buying land. Raw land, for example, forestry, forest land. That is a way that you can invest in property that is growing trees. That's a specialty. You can have real estate investment companies that do nothing but a portfolio of mining companies. In other words, they buy raw land and they mine for gold and silver and so forth. There's so many different kinds of real estate investments that are open to you. And one of the things that is important is to learn how to determine which one is a quality company. And of course, there's one other group of companies, and that is mortgages. There are real estate investment trusts that specialize in mortgages, and those are actually called real estate mortgage trusts. And right now, because mortgage rates have gone up, because interest rates have gone up, those mortgage trusts have come down in price because just, everything that is interest rate sensitive has come down in price. And so it's an interesting time to look on the stock market for good values in general. And right here, I have this, I want to share with you. This is the Value Line is a research reporting company that actually can help to give you lots of information of all the different real estate investment trusts that are publicly traded on the New York Stock Exchange and on the smaller exchanges as well. Some of these real estate companies will have dividend yields over on the right-hand side. You can see some of them are 8%, 13%. You can collect dividends of 6%, 18%, 6%. They vary quite a bit. There's a 12%, there's a 4%. They vary a lot depending on the kind of real estate that I mentioned before, depending on the kind of real estate that the companies invest in, some of which are faster growing than others, some of which are more risk oriented than others. And so it takes some research. And as an ACE money manager, how would you go about knowing how to find a quality real estate investment trust that they're doing all the work for you and you receive the passive income? It's no different than finding a very high quality stock or a company listed on the exchange. And once again, I invite you to consider coming toward me, leaning in to the financial clinic that I've created for women, Financial Clinic for Women, so that I can help you learn the basics of how to create a quality portfolio, whether it is real estate, those companies that are listed and liquid companies, that would be a specialty that I can help you with. As it relates to a place where you can go online and learn about this yourself, I would say that one of the best places to go if you're just a beginner and you want to learn about investing in real estate investment trusts, which are liquid on the stock market, would be to go to Investopedia. And another one is something called Rocket Mortgage. Has a pretty good, I think, basic investors thing online that you can learn what is a real estate investment trust and just learn some of those basics. As a beginner, begin at the beginning, go to Investopedia and then just type in REIT in the in the section where you're looking for how to find something in that group. Investopedia has so much amazing. Oh, Shauna says I'm leaning in. Okay, good. Let's all lean in, because what I've got for you, ladies, is how you can become an ACE money manager. And I invite you to come back and join me next time. First of all, let me check to see if there are any other questions, then I can catch you. And if not, okay. I'm leaning in. I'm going to learn more about that. I love that. Yes, U-Haul Trucks and Storage was also, you're right, Suzanne. U-Haul Trucks and Storage is another company that is very, very popular in terms of a real estate investment trust that can be purchased on the stock market. So I hope that this has been a little bit of help for you. If you have any particular questions, again, just DM me at Lynn, lynnekitchen.com, or just right here on Facebook or on LinkedIn, direct message me and I'll be happy to answer any questions. Come over to my website, lynnekitchen.com. Make sure that you sign up for my newsletter, because that way you'll get all of the announcements. And the big announcement is that next week we're going to start on Wednesdays, no longer on Fridays at 3. We're going to shift over to Wednesdays at 1 p.m. Eastern for Women's Wealth Wednesdays. All right? How does that sound, everybody? Is that something that would be fun for you? It would be fun for me. So I'll see you then.